were we going to say? Okay, well, I'm not looking at the end of Tuesday, so what?
Hi guys.
Well,
Hi guys, apologies for this. 1 second, there is a problem with my headset. Yeah. Hi guys, right, we are live. Let me know if you can hear okay. Oh, she's left the door open. Right, so gold continues to drop. And okay, so right now what we're looking at gold predominantly. The market has been selling off and we have come into some key strategic areas. Now, if we just zoom out, take a look, we've got PPI data coming out in 30 minutes. Sound is good. Hi, Anna. Hi, Jody. Glad sound is good. We just let a few more people log in. Uh, just let me know where you're logging in from. All right, 1 second, guys. Yeah, I can see a few more coming in right now. All right. Sorry, 1 second, guys. All right, 1 second. Bear with me, guys. All right. Who else is in the room? Hi, guys. 1 second. Let me just put a little bit of music on. Be with you in 2 minutes. Sorry, guys. 1 second. Hi, Mark. Our spouses. uh, 1 second, guys. Hi, guys. 1 second, bear. Yeah. Um, just waiting for one more registration. Sorry, guys. Just Give me a couple of minutes. Okay, so how many of you had a good day today? What have you traded so far? Have we had any positions in? Let me know what we're doing. Hey, Frankie. Hey, Jez. Hey, Peter. Yeah, just bear with me 2 seconds, guys. Right. Okay, so let's just delete current drawings from this morning. There was a couple of nice trades earlier on. So for those of you that understand the flip entry, we saw a little breakout here, and then as we saw strong market momentum coming through, um, just coming through here, this candle here was a nice, we got a wick to work with here, bottom wick range, and then the market pushed up and then sold off hard into 25.36. Now, where we currently sit, we can see that the market has formed a short-term resistance here, but if we look left, we've got another level around 25.58 based off the 15. Um, Now that'll incorporate all those wicks through here. Now the wicks are the range that the market has moved within. Now, based off this 30, there was an opportunity here in the direction of the trend, but obviously this is pre PPI news at 1:30. So this is where you probably want to be a little bit cautious ahead of the news, and obviously COMEX opening at 1:30 yesterday, and the dollar index for the last couple of weeks has just seen a continuation of this move flying up. Now, the dollar index today, if we look at it, basically touched 107 and then started to reverse a little bit. We saw cable down over 80 points at one point. Now, half of those losses or the depreciation on cable today has already come back. So what we can see from that is that the market maybe it is getting to an overstretched point. If we look at the dollar index on the weekly basis, it's come right up into this range. And this is where we've seen some monster moves on the dollar index over the last, what, 2 years, where we've seen it move from over here all the way back down to 101, back up to 107s, back down to 101, and then again back up to 107. So we've got a massive range to work with in here on the dollar index. So as we see dollar index strengthen, in theory, a standard correlation would be looking at gold to sell off. Now, just remember that gold doesn't always move in the same correlation as the dollar. So not necessarily does it mean a strong dollar a week. Yeah, we're live. Can someone just tell Peter in the members chat we are live on YouTube? Might need to share it with him if you can, guys. Um, so Um, right. So dollar index. Obviously, what we're saying is just because the dollar's strong doesn't mean that gold will be weak, because ultimately they run in tandem, they run in correlation also invertedly and positively depending on the nature of the market. So for instance, if we have let's say times of uncertainty where we see geopolitical tensions, what you'll find is you get dollar rise, you get gold rise as the markets tend to run for safety. Um, right, one second. Just one of the guys is trying to get in. Let me just share this. Uh, there's someone else has already shared it. Fantastic. Thank you. So where we currently sit right now, gold, no, massive sell-off. We are potentially in line for a little bit of a correction, but don't fight this trend. Keep trading with the trend, and this is where the flip entries will come in. Super, super handy. Okay, so when they come in, we can obviously find decent little opportunities. So looking at gold here, I think we're going to look for what's the distance on this one here. So if we were to break 25.51.50, 25.52, so it's nearly 10 pips. So look, I'm not going to get stuck into a flip entry when the wick is already 10 pips. You're just asking the market to go and hit TP1 when in theory it's already done that on a flip style entry. So I'm going to wait. Maybe I think we could look for a sell underneath this bearish hourly candle close because now in theory, let's say we had got a wick up and then it breaks the low. I'm not so interested, but if we do break this low, we can look for sell stops to target the bottom of this range. Does that make sense, guys? So I think we can look for a continuation of the trend, but really we want to be hitting that. I'm guessing you want to be looking to get short on this and hitting target or at least break even before 125. So look, let's put that order in. I'm going to look to get short underneath there. So let me pull up magic keys. Where are you? Up there. Okay, so we're going to go open calc. We're going to go switch. Pending order. So stop loss we'll put initially above the bearish hourly candle high. I'm going to look to continue to trade with trend. If it breaks the highs, I don't mind. So let's open that trade. So I've got a sell stop going in at, in fact, let's bring up the deal ticket for you. So there's the deal ticket, guys. That's what we've gone in. I'm putting a partial TP in. I'm taking 60% off at 10 pips. So partial TP at 10 pips. So if we were to just mark that in, entry price is going to be 18.49.18 there. Okay, so how many of you would look to place? So this black line here is our target or TP1 anyway, where I'm going to close. Let's say I was trading at one lot, that would take 0.6 off. Okay, so zero point 0.6 off, meaning we're taking 60% of the trade off at TP1. Our stop loss is going to be above the highs. Now, I'm only going to leave this trade open for 12 minutes. If it hasn't triggered in the next 12 minutes, then we're going to wait and trade after the news. We're going to wait to see what the news is, and then we'll look for potential opportunities after the news. Okay? Does that make sense, guys? Any questions? Anna, 3 flip entries, 2 wins, 1 loss for the very small. Okay, well done. That's a great success rate. Keep it going. Was the loss small or and what about the wins? Are they small lot sizes as well? Keeping consistent trading with the trend, so I hope they were all sell trades, no buy trades, I hope. We won't want to look at any buy trades until we get above 25.58. So what I'm going to do is I'm going to put buys above 2558.7. Okay, so I'm not going to look for any buys unless we get above there. Does that make sense, guys? Any questions? Does that make sense here? Going with the trend, fantastic. Anyone else got any trades on today? Lovely. Right, so if we get above 25.58, or if we break, in fact, no, if we break the high of this hourly candle, we're going to close the order regardless, even if it happens. So if that happens before 125, then we'll do it. Okay. Uh, where are we? Okay, so we're seeing obviously a little bit of a pullback in gold right now, which we don't mind because every little rally is giving an opportunity for us to sell. So that's the main thing. Remember, every little buy, every rally is giving us an opportunity to sell. All right, get ready to maybe cancel this order, guys. It's getting close to popping the highs. If it pops the highs, we stay on the sidelines. Stop loss is above the high of this black candle here, Anna. So above the hourly high. So use the hourly high on your broker data plus spread. So plus spread, and that will be what you are going to put your stop at. So let's say your spread is 2 pips and the price, the high of that candle is, what's the high? 25.56.95. You're going to go in at 25.57.1. That's going to be your stop loss if your spread is 2 pips. If it's 3, you're going to put it an extra pip higher. So just remember that, guys. Always use always use spread. The amount of times I see people that don't put spread on always gets themselves in a situation. So always make sure you got your spread on. We've got 7 minutes before we're going to cancel the order. Okay, 7 minutes. That's if it hasn't triggered and got us to a point where we can de-risk. Okay, so we want to make sure we can de-risk. Okay, pulling back down a little bit. So we'll sit tight. All right. Anyone else looking at any other charts? We've got a few minutes. All right, getting close, guys. Crude oil. Okay, well, let's just get rid of this. Oh, hold on. I'm going to bring that back because we want to make sure. Okay, cancel the order, guys. Cancel the order. Delete the order. Not going to run it. I'm going to wait till after the news now. So hopefully we can see some decent movement. Okay, sit tight, guys. Sit tight. We've got 10 minutes. We get above this level, we're going to be buying. Okay, we're going to be buying if we get above this level and we get a close above. If the news is positive, then we're good to go. So let's see. No, apparently might go down in price. What, crude oil? Okay, we'll have a look at that in a minute. Um, what's your rationale for apparently it might go down in price? Remember, if you're going to say something like that, um, you want to substantiate it with um, technicals or fundamentals. Now, obviously, here I'm a technical trader. The fundamentals I'm not really too bothered about in the basis that um, because we're day trading, the fundamentals right now will have a knee-jerk reaction and then we'll look to trade that knee-jerk reaction. Whereas a fundamental trader, they're looking at a longer time frame, a longer term perspective on where the market's going to go. Um, that is going to have a knock-on effect over a longer term appreciation or depreciation of something. From a day trading perspective, we're just looking to catch that first move, whether it's up, down, we don't mind. We'll be a buyer or a seller in any given day. We just highlight the levels that we want to buy and sell from. Uh, right. Right. Okay. We've got 7 minutes, guys. 7 minutes for lift off. Right. The news is saying that renewable energy is taking place. I mean, look, um, if it's in the news, then I would let's have a look. Commodities. WTI. I mean, from a technical perspective, looking at the daily, I'd be a buyer of this, especially as an end of day buyer. Um, I'd wait for this candle to close. If this one closed bullish, anywhere where it is now, next tomorrow, I'd wait for a wick down. I'd buy the break of the high. That's if I traded this. I don't trade it, so I'm not gonna do anything with that. Um, all my attention is on gold, and that's what I'm gonna focus on. Right. So now, as we look at this, there's not a lot we can do until the news happens. Now, look, people who trade the news will be doing a couple of, let's say, gambling things. They will probably put buys above their highs and sells below the lows. That just doesn't make sense to me. You're better off waiting because you don't want to get double tapped. Double tap means the market open, the news comes out. Let's say the spreads open really wide, you get triggered on the long, then it reverses, you get triggered on the short. Now you've got two positions, and you're in a whole heap of trouble. How do you manage that? Managing that kind of trade is not going to be easy. So the best thing you can do is wait for the news to come out. If it's positive or negative for gold, we'll see that initial move. It'll be, let's say, it'll burst to the upside. Then we wait, we see what the next candle does. If the next candle starts to pull back, this is on a 5 minute chart. So I would always wait 5 minutes at least before I make a trading decision. So for example, in fact, let's go to the 5 minute. We'll see, and we'll see if it can happen in real time. So uh, I'm going to pull 5 minute up over here. Let's just get ready. So what we're going to look for is either, let's say, a strong move to the upside, we get a strong bullish candle, and then the next one starts to pull back down, and then we can buy the break of the high, or the market moves lower on the initial 5 minute candle, pulls back up on the next 5 minute candle, and then we sell the low. So we're going to look to continue the market direction. Where we currently sit, maybe we're a little bit exhausted, but obviously the news will be dependent on how the market moves right now. So we're going to wait for that 5 minute candle. So yes, it means you're going to miss the initial burst. It means you're going to miss out on the explosive move. But if the news is going to have a significant impact on gold, then what you'll see is you'll see that move continue, and that's all we're going to look to do. We're going to look to try and get that continuation. So let me change screen while we wait for this. Oh, wrong screen. There we go. So this is what we're looking for. So let's see what happens. Let's just minimize that so I can. There we go. Done. Okay, so we're not going to do anything on the initial announcements. We've got 2 minutes for the announcement. We're not going to do anything. We'll wait until after the announcement. Okay, so first 5 minutes after the market news has been released, we're going to get a move to the upside or the downside, and then we'll make a trading decision. So let's see what happens. Hmm. Okay, so sitting tight, guys. All right, 1 minute. So if we're doing this, this is proper count we're using right now. So first time using this company, so let's see if they're any good. We're up a couple of percent. Um, got an 8% target to hit. So I'm going to document it, see how we get on. Uh, done. What we done? All right, which way is it going to go? All right, what was the news? Uh, hmm, no real significant moves just yet. See what the data was. Uh, came in exactly as forecast. CPI, core PPI came in at zero point 0.3, forecasted zero point 0.3. PPI month on month came in at zero point 0.2, and unemployment claims came in a few thousand better than forecast. They came in at 217,000, forecasted 224. So yeah, it's positive dollar. Let's see what happens. Uh, on that basis, guys, because I don't think there's too much going on, I'm going to re-input my initial trade underneath the low of the so let's put that there. So I'm putting the same entry that we had in before. So open trade and partial TP. I'm going to put in at 60%. So if you want to see the numbers, guys, is there 2549.97. What's the low? 25. I'm just gonna bring that down a touch. So 85. There we go. So that is gonna need deleting and re-putting back in. So basically what I've done is I've repositioned the same trade, guys. So it's the same trade we had on prior to the news being released, but we just deleted it to see what impact it had on the market. I would say that the data that's come out is it's pretty solid. It's where they want the US dollar right now. It hasn't come in hot or hasn't come in below expectation, so uh, probably decent for the economy. Rates can probably stay where they are for now, which probably just means they're going to bode well for a little bit more dollar strength at the moment. What's that meant to the currency market? Looking at euro, it's held off a little bit from its lows at 104.97. It's now at 105.30, so it's up about 30 ticks from its lowest price. Cable's up about 40 from its lowest price. Um, it has sold off though on the back of the news. It has sold off. Not massive. What's it dropped? 20 points on the back of the news and starting to push a little bit lower. Euro's doing the same, so we'll see. But I'm gonna leave the short in on gold for now. You should be able to see that. Let me know if you can see the end. Yeah, exactly, Jody. Yeah, we've not seen spreads go wild just yet. So I would say the market has kind of digested the information, and unless we get a move like we did yesterday, which followed later in the day, we shall see. But yeah, I'm gonna, like I say, this position that I've placed, it's in fact, let's just put another partial TP in while we're waiting. I'm gonna put 25 pip stop, 25 pip. We'll put 50%. There we go. Now, what's going to be the conditions of this? Well, the same as what I said previous. So the conditions will be if we break above the highs. So let's say we see price go above 2557.1. So if this candle creates a new high, which it was about to, uh, so if it creates a new high, I'm going to close the position. Okay, time to close. Why do you think I've closed the position, guys? Why do you think I've closed the position? I don't care if it drops now, but why do you think I've closed it? So yeah, no pending orders, just sitting and waiting now. So the 30-minute candle, if you look over the last, what, couple of hours, uh, closed it because it broke a new high. Okay, so if it creates a new high and it broke the previous candle's high, look, I don't want to be in that until I see confirmation of something otherwise. So what would confirmation otherwise? Exactly, Liam. If it breaks a new high, potential for it to continue to new highs. So if we look at this, sorry, I hate method for. Let me change screens again now, just because I hate it for analysis. There we go. Okay, so let's look at gold here. So this little range that we're forming, we need the market to do something different for us to get involved. Now, if it breaks to the upside and we break out this little range to the upside, we can see that based off the 30-minute, if we got a close above what, 25.57, then that should pave the way for, let's call it 25.57.2. That should pave the way for nice upside. So remember, we've got 23 minutes now left for this candle to close, and we're not really seeing a great deal of movement. If we look at it to the downside, oops, there's support level. If this market was to reverse and we got a close outside of this little range, then what we could do is we could wait for the same setup we've just been discussing. So we get a buy, a close above the range, a wick down. We can buy it into this structure here, 25.65. So it's like an 80 pip range. So we'll put that in there, 80 pip range. Looks good. Okay. Now we've said we want the market to do something different, which would mean it breaks out of this range here. So buys above there also means we look for sells. Oops, sells below 25.52 point, call it 52.1. Drop that there. Okay, so now we are moving. Now let's just drop to the left hand side. What do we notice? If we're going to look at the 15-minute, we have some structure here at 25.58.70. Kind of looks good, momentum looks good. So we'll give it another 7 minutes. If we do close outside of this range, based on what I'm seeing over the next 7 minutes, and we test somewhere in this area here, we get a wick down, then we can happily buy this 15-minute candle. But I'm not just gonna go ahead and buy it now. Even if it comes up into it, if it starts breaking and runs all the way up here, I'm not bothered. I'd rather miss the trade than jump into it now on a fear of missing out on a trade. This is where I see a lot of traders go wrong. They'll see the market breaking out, especially after a news event like this, And what do? Their emotions get involved. They kick in, the dopamine kicks in. They go, oh, I'm going to miss a winning trade here. So what do they go and do? They go and buy straight away. And next thing you know, it reverses back down and goes back within the range. How many of you done anything like that before? Okay, so we're popping. Interestingly, gold's pushing up, euro and pound, kiwi, uh, Paolo, yeah. Don't worry, you're not the only one. Yeah, Liam, saw you were super, super disciplined. Now look at this. Look at this. This is classic. This is where anyone that was getting sucked into the breakout, potentially have just been trapped right now. All we've done is we've sat on our hands and we're waiting 5 minutes. Now, imagine you got trapped into this, you got in, then it's come back down, it's gone below the range. You start to panic a little bit. Now you go, okay, I'm going to close the trade. Now you close the trade because it's you've panicked. Now you start to see it go back up. Do you buy in? Do you wait? What do you do? It starts to move lower. You think, oh God, right, I got it wrong. So you start to sell. You start to cross-check and do different things. You play some serious emotional mind games with yourself. So the best thing to do is just sit, wait, let the candle close. If it closes outside the range, we have a setup. Once you've got a setup, then you just go through the process. One of my members earlier today, he's he's good at analysis. He understands the setups, but he started a funded account, right? Guess what's happened? He's having mind games. His mind is playing issue. His mind is playing all sorts of tricks on him. How to trade. He's panicking every time he places the trade. And I just said, look, what's changed? You know what a setup is. You know how to analyze the marks. Just trade it. Nothing has changed. The only thing that's changed now is your lot size and your mindset because you know now that this is a funded account and not your own account or not a demo account. So this is how the mind will play tricks on you when you come start trading live. So the best thing you can do when it comes to trading live is start small. Start as small as you can. It's not going to do any harm. Yes, you're not going to see mass growth. You'll see very little growth, but what it will do is it'll instill confidence in you into you spotting the setups. Then when you have confidence, then you can start to scale the lot sizing slowly. Okay, so scale the lot sizing slowly, and then when you see more results, more consistency, then you scale it again. Give yourself timelines to hit. These are things that are going to be paramount to your success. Sitting here and watching it go away. How many of you are watching this move up here and thinking, oh my God, I should have bought it when it was down here? How many of you are thinking that now? How many of you have got FOMO watching it go? Anyone got FOMO? Right, let's have a look. So look, this is going to do something that it hasn't done yet, which is it's going to close above this range. So on that basis, we still have 48 pips based on the current high of the candle. None. Good. Good, 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 good. Here you go, Mr. Flipper. Are you ready? 2 minutes. Jody, no fit. No FOMO. Good, 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 good. Right, if we get a nice strong close. Yeah, if it's a nice strong close here, yeah, as long as the next candle moves down, then you can get yourself set up for a flip. We've got 20 seconds left. Where the candle closes right now, we've got 23, 24 pips. So yeah, there's plenty of room for a flip. I just wouldn't want to see it close below this level. As long as it closes above that level, then you can look for a flip, providing you get a wick down. Uh, so no wick down, so no trade. So no trade. Exactly, no wick. Anyone that bought that as a flip entry, then it's just a gamble. The only positive to that gamble is that the last candle was a momentum candle. It took out the lows, broke the highs, and then closed above the previous candle's high. But that's about it. You don't want to be getting stuck into those type of trades, guys. You want to leave those alone. No wick, no trade. Perfect. No John, no trade. So if you look, Liam, can you turn into a I'm sure Liam will be able to. So look, if we just go over to, is it this? No, wrong chart. Here we go. So look, you can see no trade, sat there, no trade, not doing anything. All we've done today so far is one trade and one win. That's it. Very, very steady. Nailish Meta. I have a wick. Why? I am using the same. What time frame? Uh, yeah, we'll get Liam to create some nice tunes. So look, there's nothing setting up for us right now. Give it 13 minutes, see what the hourly candle looks like, and if there's no setup on the hourly candle, then we'll call it a day. Um, right. Okay, let's take those off. We don't need it. There's no trade. Let's see what the hourly is looking like. Okay, so the hourly, there's potential. So we could get a flip on the hourly, but we have to wait. And again, it comes down to waiting for the candle to close. Um, so we've got 12 minutes. Let's see how it closes. We'll come back to the other, we'll come back to trading view while we're waiting because I just don't like the MetaTrader charts. I'm not sure how they come through on YouTube. Does the white it just doesn't look very clear from what I'm seeing. I have a wick on Vantage and my new candle was much earlier than the TV. Yeah, well there is a slight delay, Petter. The reason there's a delay is the latency in YouTube. So as I'm speaking, the the new candle was open obviously as and when it's meant to. But I think by the time it comes through to you guys, there's probably going to be, I don't know, maybe anywhere between a maybe 10 and 20-second delay, which unfortunately I can't help that. As much as I would like to be able to do something about that. Yeah, the wick. I mean, obviously, it's created a wick now because it went down afterwards. Um, but that's no good for the trade. So we're gonna wait for the hourly candle. Now, look, the hourly candle. If we close above here, let's just put it on the hourly level there, 25.57. Yeah, we'll call it 25.57.2. If we close above there on the hour, we've got a nice wick to work with. Only downside to this is, look, we've seen lots of wicks in this price point before we got a strong sell-off. Doesn't mean we'll get a strong sell-off again. We could potentially see the market rotate back up to 25.65 before moving higher and then so forth. Um, so right now, 10 minutes to wait, guys, and then that's see if we get our trading opportunity. Okay. We're not going to do anything else. We're not going to force the charts. We can't force the charts. We can't make the markets move. All we can do is apply a set of rules or principles to the chart, and if they are what we call an if done process. So if the hourly candle closes above 25.57.2, and I have over a 20 pip wick, and then the next candle moves down first, creating a bottom wick, I will then place a buy stop above the high of the live candle to fill the range of the previous wick. Okay, so that's an if done process based on what we're seeing right now. If that doesn't happen, then guess what I do? If that doesn't happen, guess what I do? Anyone got any ideas what I'm gonna do if that doesn't happen? So we've got 8 minutes, and it's the position, the stance has changed yet again. It was down here and it didn't look like it was going to get back above. Now it's potentially getting above. This is why it's so important to just wait. By waiting 8 minutes could be the savior of you being in a trade and trying to get out of it, or keeping you out of a trade. So just remember, always sit on the sidelines, wait for the candle to close, and then make your decision. If you wait for the candle to close, you're not going to react based on impulsive emotional decisions. Okay, so that's going to be the biggest takeaway you need, guys. Because if you react based on impulsive emotional decisions, you are going to be then using dopamine and fight or flight mode to make a decision, which isn't good. You're not going to make your best decisions in that kind of moment. You need to be methodical. You need to have it planned out. You need to know exactly what you're going to do and why you're going to do it and when you're going to do it. If you don't know that, then unfortunately, you're creating a lot of issues for yourself in a trading journey, guys. You want to make it so that there is no emotions for you whatsoever. 5.5 minutes, guys. 5.5 minutes. Okay, pound looks like it's pulled back a little bit after the initial move. After the news came out, it sank. Now it's back to where it started. Kiwi, similar. Euro, similar. Aussie, yeah, all doing similar things. So let's it's just like waiting for paint to dry. But if we can get this, then if we can, there's going to be two trades, right? Okay, so the two trades we've got, two trading opportunities we've got is one is, but both of them need what? There's going to be two opportunities. For those of you that are members, you will you'll know that they're both different entry types. So, but they need the same thing to happen first of all. What do you think the first thing is that needs to happen before we make a decision? What do you think the first thing is we need to see? No pending orders at the minute. We're just waiting for the hourly candle. Yeah, exactly. So the first thing we need to see is a close above the level. Perfect. So once we've seen the close above the level, two potential trades. What are they? Slightly different entries, but what are they? There's two different potential opportunities. Yeah, so we wait for the candle to close above. So we wait for the candle to close above 2557.2. Then Anna, okay, so that would be one entry. So a flip entry would mean as long as we have 20 pips on this wick here and the next candle moves down, we can look to buy the break of its own high to fill that range. And yes, exactly, the breakout or the flip. The breakout would be a move above the high of the high. So buy stop above the high of this current candle, or the 1 till 2 o'clock. We're looking for the next candle to wick down. As it wicks down, it breaks the high. We're looking to fill that range. So what have we got there? 46 pips to the upside on that basis. And then the flip, well, obviously that depends where the candle closes and if the market moves down. Oh, sorry guys, didn't mean to drop a yawn there. But we got 2 minutes, 10 seconds before we can potentially place a trade. 2 minutes and 10 seconds. And then if it doesn't set up, what do you think I'm going to do? If we don't get a close above and we don't get the setup, what do you think I'm going to do? So, ooh, having another little push lower. Euros down another 10, pounds down another 12. Kiwis, exactly, Anna. If it doesn't close above, I'm going to do nothing and I'm going to close my computer. 4 p.m. Yeah, good idea, Nigel. Could wait for London fix. Have I seen a significant directional move? I suppose it's come back about 14, $15. If we get let's say 3 o'clock. So we have, oh, it's going to be close. Check your broker data. Got 30 seconds left. 30 seconds before we decide whether we're going to place a trade or not. So for me, let's have a look. 5 seconds. We're above the level. So look, what I'm going to do is I'm going to put, and it is, ah, yeah, I'm going to, if it just pops up, I'm not going to trade it from there, but I will look for the breakout trade. So I'm just, in fact, let me share screen so you can see where my screen. Okay, so there we go. So I'm just going to see if we can have, look, like I said, I'm not a super aggressive trader. I want to see this pull down more than just what it has. If you buy it there, that's your call, that's your prerogative, guys. I'm happy for you to trade it in this instance, but it looks like I'm going to be putting a buy stop order in here. Okay, okay. So let's do that. Let's take off 60%. Took it and TP1. Hilarious. I knew some people would take that. I mean, we're talking, it's barely the spread. It's barely the spread. Well done on the 10 pips, but yeah, not for me. Not for me. Too aggressive. Let's put in. Uh, so I'm just going to give it a couple of minutes. If it hasn't triggered, then I do have to go. Unfortunately, guys, I've got a coaching session at 2 o'clock. But you should all know the management techniques, guys. TP1 stops to break even. If it hits 70% to target, then as it pulls back to the entry price, you can close half off. If it goes 70% to target, you can move it stops to break even. Both rules in there to protect capital on the basis that if you get triggered and it moves in your favor, and a large proportion to your TP1, then in theory you should be de-risking. Now, whether that's moving stops to break even or closing partials, should the market come back to your entry point, that's entirely up to how you want to de-risk leading using different trade management or active trade management techniques. Okay, so one more minute and then I'm gonna have to go. But you see my orders here. I will update you in the members group how I get on, but I'm already a minute, I'm already 3 minutes late for my coaching session. Um, if it breaks its own low, I'm gonna cancel the order. So if it breaks its own low, I'm gonna cancel the order. And there we go. I'm gonna cancel. Okay, guys. Listen, have a great day, and I will see you. What is it? Thursday. Oh, that's it. I'm done for the week now, guys. Unless I do a live stream for members in the morning. So, guys, well done. Lovely to see you all yesterday. If you aren't yet registered for the live trading day on the 4th of December for members, make sure you do so. Spaces are filling up. We've already had a couple of spaces taken since I just sent out the quick newsletter in the members group. Everyone else, look forward to seeing you on our next live stream, which will be Tuesday next week on YouTube. Bye, guys. Take care. See you next week. Bye bye.